Now, it could be said that socially responsible investors use both their heart and their head when it comes to making financial decisions. Socially responsible investing, or SRI, integrates personal values and social and environmental concerns with investment decisions. SRI is also known as mission investing, sustainable investing, green investing, or ESG investing, etc. This topic is closely related to the community responsibility section we covered in life orientation. It also covers the triple bottom line approach, or the three pillars we learned in tourism: people, planet, profit. So where do you stand? Whether liberal or conservative, there are causes to support the SRI world. Some are concerned about tobacco and alcohol, others are not, but there can also be crossover, as SR investments can both be environmentally friendly and anti-nuclear, for example. The first SRI fund, or socially responsible investment fund, started in 1971 in the US, and it grew to 2.29 trillion by the end of 2005. The Social Investment Forum reports that in 2010, the SRI market accounted for 3.07 trillion out of the 25.2 trillion US investment marketplace. Social investments in the US grew 380% from 1995 to 2010. The bottom line is that when it comes to influencing socially responsible change, money talks. Socially conscious investors speak with their pocketbooks to encourage corporations to improve practices on environmental and social issues and to build wealth in underserved communities by employing these approaches. Number 1. Screening for negative and positive causes such as tobacco, alcohol, gambling, weapons, animal testing, environment, human rights, employment equality, community investment, etc. Number 2. Taking an active role in talking with companies on social and environmental issues. Number 3. Directing capital from investors and lenders to underserved communities, providing access to credit, equity, capital, and basic banking products. Although market declines have impacted many SRI funds, I think that market volatility will draw more investors to SRI investing going forward. The added emphasis on responsible investing means that investors will pay more attention to how their dollars are being invested. The Social Investment Forum is a national membership association that promotes socially responsible investing. Its website offers tools for investors, including an extensive database of SRI funds with screen profiles and performance data. Here are some market indexes which differ in their emphasis on social characteristics, and these all track the SRI fund performance. The Domini 400 Social Index, or DS400 Index, the Calvert Social Index, Citizens Index, Dow Jones Sustainability Index. The two sides to the coin and the softer side of SRI. The upside is that SRI makes someone feel good about investing. The downside is that you automatically rule out some of the most profitable investments in the stock market, such as oil, for example. A socially responsible investor generally moves towards softer service type firms such as healthcare and tech, as these tend to be more modern and more integrated and less discriminatory. So what should you do? If you decide to add SR funds, you should use the same fundamental approach as with any other fund. The key is always to be diversified. Once your core investment mix is in place, you can screen funds according to your personal values and ideology. Oh, so you're investing in Beyond Meat because of the unsustainable and some might say inhumane way in which we're getting meat. Yeah, well, I'm really trying to make sure that, the money I'm investing is actually making the world a better place, and I think Beyond Meat will help us do that. That's pretty cool. Yeah, I've been really getting into this ESG investing thing. Anyway, what about you? What investments have you made? Well, I've been investing in GameStop, and if you ask me, Dogecoin to the moon. Now let's talk about Ella Gupta. Ella Gupta is a 16-year-old author of the recently released Gen Z Money Sense, a personal finance and investing guide. She's a high school student in North Carolina, and she's also the founder of the Initiative for Financial Literacy Exploration. Her interest in personal finance and investing was sparked at 10 years old when she sold rainbow loom bracelets and invested half her profits in the stock market and donated the other half to a pet charity. Her goal is to democratize financial education so that everyone is empowered to take charge of their financial futures and live out their dreams. ESG. E is the environmental component, S is the social component, and G is the governance component. Ella Gupta, a high school student in North Carolina, recently released her book explaining personal finances to her generation, Generation Z, me. As millennials and Gen Z have begun investing in the stock market, a wave of interest in sustainable and ethical investment options has flooded Wall Street. ESG does not only benefit the planet and society, it also has tangible benefits for your wallet. Following an ESG framework can reduce investment risk. For example, a company that engages in ESG practices may be at a reduced risk for lawsuits and employee turnover, which would require it to spend money hiring and training new employees. Ultimately, ESG investing enables you to grow your money while supporting companies that align with your values and your vision for the world. Your investment dollars can help shape the world you envision and accelerate meaningful change in an impactful way. Hey guys, this is Swaledi in the video editing realm. Thanks for watching, like, subscribe, and I'll catch you guys on the next video. If you want to learn more, I've added another video and it'll explain ESG investing a bit further, and I found it in the Creative Commons.
In this section, we will discover how ESG or sustainable investment movement emerged. Sustainable and responsible investment movement takes its roots in 1700s, when religious groups in US refused to invest in alcohol, gaming, and tobacco companies. Later, in 1928, they called it a sin screen that is used to screen out the same three products. These were the roots of what we call today negative screening, which means excluding companies or sectors that do not comply with preset social or environmental criteria. In the past few decades, several other derivations of sustainable investing have emerged. Notions such as thematic investing, positive screening, impact investing are being actively used in investment strategies today. Socially responsible investing, or SRI. As of today, there is no exact definition of what SRI investment strategy has to exclude. This is something that is determined on the portfolio level. Consensus about excluding alcohol, tobacco, and firearms industry seems to be pretty common, although some investors consider that oil and gas sectors should be also excluded. Sustainability or ethics can be defined differently from one person to another. It is important to integrate this subject as part of the KYC process. There is an increased amount of asset owners who at no cost want to invest in oil and gas sectors, or companies that are known to have unethical practices. This creates an additional responsibility on the investment advisor side, as now they have to know their client even better and they need additional tools to screen the right investments for the client. Here's an example of SRI labeled mutual fund IG Mackenzie Summa SRI. This mutual fund uses negative screening. They exclude companies in tobacco, weapons, alcohol, gambling, and pornography industries. If we take a look at the asset allocation of this fund, you'll notice a higher weight on financial and technology sectors. This is quite typical for SRI portfolios. So how about the performance? There is a lot of debate and increased amount of research on whether sustainable investment portfolios yield a significantly different financial performance. Some argue that limiting your portfolio by applying ethical filters can hurt your returns. Others say that it actually improves your risk-adjusted returns and reduces portfolio volatility. What does the data show us? Based on global index comparison generated by Bloomberg in 2019, MSCI World SRI has slightly outperformed MSCI World over the past 10 years. These are indices, so several factors are not considered by this performance analysis, for example, transaction costs and management fees. RBC Global Asset Management published a report in 2019 called Does Socially Responsible Investing Hurt Investment Returns? Their findings show that SRI detracts from performance when investors exclude companies, so the negative screening, But the SRI improves performance when investors focus on companies with high ratings on ESG indicators, which is the other word for positive screening. At the end of the day, there is no definite answer on how SRI affects the returns. It all comes down to the quality of portfolio manager.